Welcome to weekly view on markets. Bank Nifty has taken the leadership during this week. In my last week review, I had mentioned that the Bank Nifty valuations are very attractive and Bank Nifty is likely to gain further. And we have seen that happening during this week. Nifty and Bank Nifty gained during this week. There was big correction in mid and small cap stocks during this week. But the correction was short lived, and immediately we have seen buying in these mid and small cap stocks, and most of the loss is recovered during the week itself. So, market is in strong uptrend, and investors are using dips to buy good stocks. So, the charts indicate market is in a strong up move and market is likely to test new highs and bank nifty will definitely lead the rally and we will still see higher levels in the bank nifty. Let us look at the performance of indices during this week. Nifty has crossed the crucial level of 20,000 and closed at 20,192. It is up by 373 points, gained 1.88% during the week. Bank Nifty is at 46,231. It has crossed the crucial level of 46,000, which I was mentioning in the previous week. Gained about 1,075 points with a gain of 2.38%. Mid cap and small cap indices recorded a small correction of 147 and 19 points respectively. There was big correction on Monday and Tuesday in the mid and small cap indices, but most of these losses are recovered, and we ended up with a small loss for the week. India VIX is at 10.90. There is a change of only 0.12 points in India Nifty. Market is more or less trading quite stable. That is what India VIX is indicating. Let us look at sectoral performances. Most of the sectors have gained during this week. Banks led the rally, and among banks, PSU stocks gained. PSU bank stocks gained the most, 7.22%. Pharma sector gained around 2.18%. Information technology sector gained about 2.90%. Auto sector gained about 2.01%. NBFCs gained about 1.95%. Private banks gained about 1.8. Healthcare sector gained about 1.6%. FMCG sector gained about 1.11%. Media stocks were down by around 3%. Public sector stocks lost about 2.31%. But last 3 4 weeks, there was a raising rally that was happening in public sector stocks. So I look at this correction in public sector stocks as a profit booking. Oil and gas sector lost about 1.01%. Remaining other sectors were almost consolidating in the range of less than 1% movement. Now let us look at technical charts. This is the daily chart of Nifty index. As we can see, Nifty has closed at record high levels and the chart is making higher tops, higher bottoms. And any dip like this look at this red candle, this any small correction or dip like this is immediately bought by the investors. So the chart structure remains strong with participation by most of the sectors. So the chart indicates that market will see higher levels in the coming week. This is a chart of Nifty Mid Cap Index. Mid Cap Index has given a sharp rally, almost a non-stop continuous rally. And last week we had discussed on the valuations. So because of high valuations, we have seen a sharp correction in the beginning of the week. We can see this big red candle. But investors have used this dip to buy, and most of these losses are recovered within 1 week. So the overall structure of the chart is still strong, and we will see indices going higher in the coming week. This is the chart of Nifty Small Cap Index. This is similar to the chart of Mid Cap Index. We have seen a big correction in the beginning of the week, and that correction is used for buying by the investors, and most of the losses are recovered. Again, the overall chart structure looks very strong, and we'll see higher levels of the small cap index. This is the chart of Bank Nifty. As we can see, Bank Nifty had touched the previous high during this week, and among all the indices, Bank Nifty's valuations are still quite very in the attractive and reasonable zone. So I expect that Bank Nifty will lead the rally in the market, and we will see 47, 48,000 levels in the Bank Nifty in coming weeks. Now let us look at some of the market fundamentals. IIP numbers, that is integrated industrial production, for the month of July has come, and it is at 5.7 percent. So it has gone up compared to the previous month. In the month of June, it was 3.7%. So this is a very encouraging factor for the economy and for the markets. Along with this, the retail inflation figures for the month of August has come, which has come at a lower percentage of 6.8 comparing to 7.4 in the month of July. So this was one reason where we have seen that the market has shown buying in all sectors because of the lower inflation numbers and higher IIP growth. Retail inflation was down due to the lower vegetable and food prices. After the onset of monsoon, the vegetable and food prices have come down. This was a major factor which was pushing up the inflation in the summer. So, due to this reason, we have seen that retail inflation numbers for August has come lower. RBI dollar reserves has touched 601.45 billion US dollars. INR USD rate is gone up, and it is at 83.09 rupees for $1. Dollar index is steady at 105.45. Gold price has dropped below 60,000. It is at 59,900 for 10 grams 24 carat. Crude price has gone up beyond $90, $93.93 per barrel. So the crude price going up is definitely a red flag for Indian markets. We have to watch the crude price. If crude price steadily goes up, and if it crosses 95 or 100, then definitely it will push up the inflation, and it will push up our import bills. That will affect the trade balance and trade deficit, and that is not good for the equity markets. During this week, FII's selling has slightly reduced. They have sold 746 crore, whereas in the earlier weeks they were selling 3 to 4,000 crores in every week. Along with that, the DIIs have bought 3,364 crores in equity during this week, and the result we have seen that most of the sectors have seen buying and ended in green. The red flag for Indian economy is that the trade deficit month for the August 23 is 24.2 billion. So that means our exports are less than the imports. That is why the trade deficit has gone up, and the fall in overall exports due to the global slowdown, high oil prices, and problems in Chinese economy. This is all not good for India's economy, and that will get reflected in the stock markets as well. So we need to watch the oil prices. We need to watch out for the trade deficit in coming months. Any dip is in the market is used by the investors to buy immediately, and corrections are short-lived. Technically, market is in the strong uptrend. Any dip is immediately bought by the investors. We should follow the trend. Despite I have little concern on the valuation of the market, but we have to follow the trend. At the same time, investors should be cautious of valuation, and they should use the correction to buy quality stocks only. Mutual fund investors should continue their SIPs. They should need not to worry about uh, these valuations going up or day-to-day fluctuations. They are investing for long term. They should focus on their goals, their long-term wealth creation, and volatility in the market helps SIP investors. So they should continue their SIPs. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can give your comments and questions which I will reply. We'll see you next week again. Thank you.